What's up guys, welcome in this new video about the part 2 of the Wick CE. Today I'm gonna show you really fast what some example of the Wick CE. Here, as you can see on the chart, I wrote down the main characteristic that a Wick CE must have. And stop the video if you want to note that, and I suggest you to do that because they are really important. And so CE stands for consequent encroachment, and it's basically, as I told you, the 50% mark of the week CE, of the week. And you have to trade away from doll, so drawn of liquidity, and the week must be not the start of an imbalance. So if we have a 4-hour week, see, that week must not be a higher time frame fair value gaps, imbalance, whatever you want to call it. Here I found a small example of what a week is. In this example, it wasn't really expected, we didn't touch the C, but it's still a good way of trading it. As you can see, it's a good week because we touched the 50% mark of the fair value gap, and the 50% mark of fair value gap is the biggest point of volume that you can have in a fair value gap. And in fact, as you can see, we got a strong rejection. We swept two equal high lows, and in this case we don't have any engineered liquidity, which is one of the main point, but I prefer actually only liquidity sweep and a big fair value gap. But yeah, engineered liquidity makes it a really good and high probability for a weak CE. And what else? I'm gonna find this fucking 1 minute. It's so bugged to let you see how to execute on the weak CE, because I have a standard procedure. I don't just enter without any random stop loss and top profit. Okay, it's a big bug, but I let you see using the tool. In this case, it was a bullish week C, so on the C of the week we put our it's not working. Okay, yeah, we put the our tool on the 50% mark of the week, so the C, and from there 1 point up, because spreads and shit like that. So 1 point up or 2 point up, depends on you. And 10-point stop loss, it's my standard procedure, but you can get away with 5 point, even 7 point it's good. It depends of the trade, of how many confluence are you aligning in that level, and how confident you are. So yeah, 10 point is the standard procedure, 9 point because now we need to put 1 point up, yeah, like that. And TP usually is 40 point, the standard procedure, but you can't get away, of course, with many more. 40 point, it's like my first TP, then I trade my stop loss and I let one contract run. That's usually what I do. And what is so cool about this strategy is that you can rules basically 4 times, and with an half size the win you can remake all that back and plus more. So it's a really cool Wixie. It's a really cool concept, and just by that it could be a model. I trade it personally sometimes. It's very good. but of course you need other concept to make it even more high probability, because the way I prefer to trade personally, it's win an high win rate, an high risk rewards, and maybe not maybe and less trade over the week, over the month, you know. So it was a pretty good example. It was not to be expected, but it's fine. The equal lows are a very strong drone of liquidity, and what else? If this if this week, as you can see, I drawed an example of a week that form the Wixie as a equal low, it's not valid, because then equal lows, as you might know, are very good form of liquidity, very strong form. So we might want to, the market might want to sweep that, so it's not a good form. So don't trade weak that are equal lows or either equal highs. And as in this case, you know, you can see we have a lot of liquidity that was swept, so it was a good week C. But if this works out, I can show you. What the fuck? But as you can see, yeah, we have equalize, so it's not a good point of liquidity of a week C, sorry. And what else? I think that's all I needed to say. Yeah, week C, so equal I equals not good week C. Not good. Here's we have another example of a week C. We swapped this size. We have also engineered liquidity after the week. Yeah, okay. 5 minutes. Okay, yeah, as you can see, we have engineered liquidity. We swapped liquidity previously. We are in a fair value gap, and we respected also another week C, so that's a very good trade. We could have traded it with the candle right after it. It was also good. Standard procedure, 10-point stop, and insane risk rewards, as you can see. We would have TP'd at these lows there, and this was a fucking crazy risk rewards trade. Yeah, 23 risk rewards. 22 RR is crazy. You can lose basically 20 times, which you don't want to do, of course, but you can lose 20 times and still be in profit. And that's why I really love this concept. You can basically trade just with it, and this confluence. And yeah, that's crazy. Also 7-point stop, it was good. 32 RR, that's crazy. So yeah, that's it for today. That was, I think, my last example. If I find anything better, yeah, yeah, that was the trade of yesterday, of 2 days ago, and yeah, I got stopped out, but it was against the bias, so yeah, you shouldn't have taken it. And that's it for today. Yeah, it was this trade, but oh, even if it was against the bias, we still would have TP'd full final TP, but got stopped out, as you can see, but it's fine because with one win I'll remake 10 times that loss. And that's it for today. If you have any more question, I'll make part 3, but I think I made it all clear. I know I'm not the best teacher, but I hope if you're watching this video, you already are a bit experienced and you can understand this concept with a bit of a flow. And in the next video, I'm gonna show you the next concept of this strategy. And thanks for watching. See you in the next video.